Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're just going to go over the trade setup that I had put before you on the weekend, and now that the Monday sessions are, kind of kicking off in some regards. That is, that there are some reduced hours for some of the assets we were talking about, as well as the 24-hour exchanges. And then, of course, we do have perpetuals. But right now, if we just take a look at, the S&P, of course, the setup was just in the middle of this range, and we would want to know if it was going to move up or move down. And I was suggesting most likely we would get a move up. That's slightly my bias, but I wasn't really ready to call it. We really would want to see some type of movement from this middle area, approximately 381 where we are. And if you did want to have a long setup, you'd probably want to wait for, a more clear message like breaking 392, or perhaps if you wanted to short, maybe breaking 363. Of course, it's up to you. We also have this region down here at 373. So, if you wanted to take the short off of the previous candles. Of course, on the S&P mini futures, we basically have the same thing going on here, except we are running into a little bit of overhead resistance at 3831. And so this could potentially send us back down to test the bottom of our range here if we're not opening up a little bit more bullishly this week with the rest of the indices. However, in our overall picture, you can see that we're just, in the middle of that kind of channel that's now being carved out. After having completed this first leg down, we got a nice pop up. Then we started to carve our way down, found some of this diagonal resistance, as well as just, kind of turned this area into some type of just temporary support, I think. Maybe we might get a little bit of harder support below here, but this diagonal does seem to be being used as just a little bit of a bounce here, just like this area over here was used as a bounce. And so the market's looking for any excuses for any type of bounces, but they are extremely short-lived, and so we're just in the middle of that range, probably going to chop down a bit. Going over to NASDAQ, you can see, of course, that basically the same setup exists on the NASDAQ, which is a bit different than crypto, which I'll get into in a moment, as crypto did have an interesting, change in the structure. But same thing as S&P here on NASDAQ, just kind of having this first leg down. We had a nice pop up off of, some type of consolidation area to the left, and then, kind of repeating that pattern where we did get a nice breakout of that downturn that we were in, that next leg down. But the bounce off of this one was actually quite mute, and we did run into that overhead resistance exactly where we had the bounce point previously. So that made sense to take profit there. Hope you guys are applying these type of principles. We did then break down. We found support again in that area, and so I'm not sure if this market wants to try again, but that would be quite useful, as some of these indices do have gaps on them, and those gaps should get filled. So let's see if we can make another go, since we do have a pretty good consolidation area here too. And so, if we wanted to use maybe a little bit of the lower region as our main support to get a little bit more overhead clearance for a bounce, that might be what the market is setting up to do. And you can see, of course, that we did fill the gaps that were just on the really close gaps on this chart on the QQQ. But of course, we would like to break out of this overall trend. I think I probably should have drawn it like this because we did break out bullishly, and then we retested, and we just didn't get the flight to go. But we did fill these two local gaps, leaving this upper one as kind of a temptation for the future. Maybe we can recover as high as, let's see, just what would that be? As another 30% up, on some type of relief rally. Even if we don't get the full range to our previous all-time high, maybe this is the temptation for the market to go grab that CME gap. But anyway, we are still basically headed down in our current direction and, just middling this range. So for the NASDAQ QQQ, again, same situation. But we do have a little bit of that, bullish posture where if we did have a turnaround, we would basically have to break 285, and then perhaps we could start talking about testing the top of the range, and from there we would need to talk about breaking basically 300, with of course 269 as our floor, and just a little bit above us 275. Sorry, just a little bit below us 275 if we do continue downward. Let's go ahead and jump over to Bitcoin because this is where the trade setup that I gave you this weekend really has paid off. And so I hope you guys were paying attention. That was kind of free money right there. But essentially, what I had been pointing out is that we were carving out this diagonal inside of this wedge, and that most likely we were going to get a pop off of that, at least to the top of the triangle, and then perhaps we might break down. You see, we did that here, and so it was pretty expected that we would do it again. The bulls do want to break out of this formation. As I described to you guys, they would like to take us up to here and then perhaps just do a repeat of the previous kind of little epoch that we had here in terms of if we divide the chart up into eras of interest rates, right, where every month we get a new surprise. And so, basically, if they were able to garner enough steam, then perhaps we would be looking at something like this, right? And from here, from around 23,000, let's just say 22,800, just to be conservative, maybe we would get some type of rejection and chop and maybe fall off a cliff depending on what the Fed does, or who knows, maybe we get sent to heaven. But either way, we're just looking for this trade setup, and this was a solid move, to be honest, guys. So quite proud of this one because I had been hunting it down. This move was a surprise. Nobody could have predicted that move. That one it was just whale games at the end of the month. There were issues with the options closing, and nobody could have predicted that. I don't think that anybody had that in their cards, but basically, we came from underneath our wedge, all the way through the wedge, hit the top of it, and then came all the way back down to where we started. So just some type of whale games, liquidating people up, liquidating people down, and then basically bringing us back to a baseline. And that baseline, probably could have changed in a lot of people's minds using horizontal support and resistances. But if you're using the diagonals, then you can just see, yeah, we're just carving out our wedge here. And either we break down or we break up and have perhaps a nice run to the top of our range, or maybe the mid range, right, at a minimum. So let's see if this bullishness can continue. It does seem to be being rejected here, similar to this one over here. And so that's pretty, that's three pretty strong rejections for Bitcoin off of this range. But again, that's not terrible. It could be that they're just, aligning the EMAs, trying to basically get people into the setup so that they can push it. I don't know how that stuff works exactly, but you can see that we do have a very similar setup as to what was going over here. And then this would be kind of our goal. And I have been hunting this move down for a couple weeks, as you know. We got faked out on this one. We got faked out on this huge drop. My wedge was originally drawn like this, a little bit more conservatively, a little bit more like this one. But I did have to adjust on the fly for the drama that those whales induced by just putting that massive drop and then that massive pop. We have to accommodate, the whales. We're just the little fish, right? So a whale swims by and we just have to move over. Nothing we can really do about that. But overall, the market is just going to plan, and then of course we would look for that pop up. And by the way, I should just mention, we are looking fairly good. We are looking fairly good right here. And while it wouldn't surprise me if we came back down and waited until we got really wedged in the corner before we did that, sort of like what we did here, assuming that this roadmap is essentially being followed. And I don't mean strictly followed in terms of a game plan, but in terms of market sentiment, what they want to see, what people want to see on the charts before they're willing to take a little bit of risk. Maybe the market just needs to see us, putting in that. That those higher lows over a little bit longer period of time before we can actually bust out. But I do think that the trade setup is still there. Everything that I've been talking about for the last couple weeks is still valid. And if we do have a breakdown, right, we're going to be crossing this line that I marked out. So we still have our stop loss at that, perhaps $18,500 area, or if you're a little bit more risk prone, then 17,500. And the apparent bear flag that we have printing here, that could end up playing out. I think a lot of people are considering that potential measured move down to perhaps $16,000, and so everyone's getting very bearish. They're seeing Adam and Eve formations. They're seeing cup and handle formations. And so the measured move, any way you look at it, is kind of 16,000 to 16,500, and that would put us in alignment with the support that we have down in that region. If you go ahead and look to the left, we do have that wick right there at 16,250. So whether you're looking at Adam and Eve's or whether you're looking at cup and handles, that 625, if you are short, would be your 16,250 would be your target area. But guys, I'm not ready to call that yet. I told you I don't have a bias on this market. We have been so bearish, and I just think that if we do have a push down, it's either going to be a whale game, like the one that distorted my triangle, which I had to adjust on the fly, or it's going to be because of fundamentals changing in the market to significantly push us down, right? While I do believe that overall we will be probably hitting that sub $15,000 level eventually, again, each move has to be driven by something. There's just too many people who like these prices around $20,000, and so this has been a dream of theirs for the last year or two to be able to buy at 20,000. Everyone who's missed 20,000, and so this is the perfect trap. 20,000 is the perfect trap, and I would expect the market to linger in these areas for as long as they can get away with it. But overall, you can see that, just like we had this bear flag right here, right, which, has a measured move to, let's see where, boom, 8,200. What number does that align with? Oh, That was Binance's scamwick number, 8,200. And so, guys, I don't know what type of weirdness is going into this market, but I would not rule out that $8,200 price because, whether you take this a little bit further up and you get maybe 9,000, or whether you take it down and then you get maybe 7,000, we are talking about that Binance Scamwick region. And so don't be surprised if this bear flag plays out. Now, we can think that perhaps that's being a little bit too generous to the bear flag, and maybe these things are just moving in smaller waves. Where, this bear flag right here, if we can call this one, right, like this, then maybe this one broke down here, and that would be pretty cool. And then we have this one like this, and then, that would be pretty cool to bring us here. And now we have yet another one, and that would bring us down to approximately $10,000, right? And so you can see that $10,000 is becoming more popular for people to talk about. However, I would just like to mention that, this bear flag up here, boom, 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 right? This one did break down the full move. I mean, it basically aligns in this area, and it takes us to 3,000, basically $700. So guys, be very aware that these bear flags are printing, and we do have just one massive monster bear flag that hasn't finished playing out yet. And we can have all the little baby bear flags along the way, but just be aware that this market, under extreme circumstances, could potentially get into that $3,000 area that we could, at least be talking about that 14 to $10,000 area, and then we have the Binance Scamwick somewhere around 8,000, dollars. And we have multiple ways to get us there through bearish formations. Again, I'm not a big patterns trader. I don't really care about patterns as much as I care about price action. But so far, these things have been working out. And so when something works out, you just you want to just keep going with it until the trend ends, right? And you can see even up here, we had a lot of baby bear patterns, which did end up playing out. So even if you guys think, well, you can't take, this huge bear flag pattern because, it got broken up with a bunch of baby bear patterns. You just have to take every baby bear pattern. Guys, that's not necessarily true, right? It's not necessarily true because this bear flag is in fact playing out. And so, we can take every baby bear pattern for like the next leg down, but we also have to consider that we are printing just a major monstrous bear flag that could really distort us. Oops, not sure what's going on. My drawing tool, but that could really destroy us if we're not careful. And of course, the next leg down again would be suggested at perhaps that $7,500 area. So just to be aware that there are different ways to draw these things. And, if you get the worst of it, maybe something like that, and you're the most generous on where the breakdown is, then you can get some pretty extremely low numbers. But you can see how imprecise, that type of a measurement is. So you wouldn't want to necessarily be targeting one number. Like you wouldn't want to target 1,000, 3,000, 8,000, 10,000. or whatever, 16,000, you might want to just start to DCA in as we get to the lower 1/3 of this chart. Whereas you never would want to buy in this area. You can trade this area as much as you want, but if you want to hold and you want to DCA, the bottom third of the chart is where you want to be doing it, not at these crazy, crazy high levels where, the Moon Boys were telling you to just load up because you'll never get a better price in your life, right? And of course, that didn't end up being true at all. We are doing the full retrace. Crypto always does a full retrace. I don't know how long you have to be in this market to understand that crypto always does a full retrace, but we get quite low in the charts quite commonly. And while some retraces may be a bit deeper than others, you should at least expect that you're going to be hitting, those 786, 886 areas. And so why would you even bother to DCA in when you're up here? It just doesn't make sense. Where you have a clear top E formation, it makes no sense whatsoever. Get it together. Your time to DCA is beginning, but it was not for the last half year, okay? Let's see. Let's go ahead and just take a look at how the CME chart may be different from the current chart. And that's really significant because while you can see this bullish play on the 24-hour exchange, they have faked us out in the past. There's one, there's a two, there's a three. Is this going to be, yet another fake out? Are we ever going to be able to break out of this wedge, or do we need another go, right? Well, let's take a look at the CME chart in order to just get some idea. And uh-oh, this was the bearish scenario that I was talking about, and why we should be looking at both of these charts, not just the one. Because of course, what we did see here is that we had this trend line, which, did get punctured. And in this case, the wedge bottom was more of that kind of, that that slight walk upwards. It wasn't the dramatic angle to the downside, which would suggest a more of a pop, right? That descending wedge on the 24-hour exchanges, or if you can see, just focus on the red and the green wedge. Then what you can see is that this is a descending wedge, which has a higher likelihood of breaking to the upside. Whereas on CME, we basically just have, this kind of dumpy wedge right here, a little bit indecisive. We do have, higher lows being made on it, but it does look pretty frumpy and pretty dumpy. And basically, you can think of it as just a descending channel rather than a wedge. But if you do just account for the wedge, you can see that we have effectively, if we just ignore that first breakdown, we have effectively tested it, broken down, not once, but twice, and we are now retesting the underside and have bearishly been rejected off of the underside of this wedge, which could potentially take us lower. Okay, so if the professional exchanges open up, with all the stock markets tomorrow, today is July 4th, so I do believe that most of the indices have reduced hours or they're just closed. So if tomorrow we open up bearishly and it's a bearish day, then you could see the professional exchanges just taking Bitcoin down, and there will be nothing that these 24-hour exchanges can do about it because liquidity is just going to be too high and the major players are going to take it down. But of course, How far could we go? Could we just be taken down in our descending channel here? Because we could still, kind of get a little fake out to 16,000 and then end up putting in this type of a move later on using that 16,500, 16,000 area is a little bit of support, and then getting a nice bounce, and then perhaps continuing our way down. That's one possible scenario if the bearish breakdown does happen on CME, then potentially, we do just end up perhaps testing this diagonal or testing this diagonal, something that's being created here, or perhaps even using it as resistance if we break under it, right? I don't know. That we'll have to get to those setups later. We're thinking a little bit ahead of ourselves here, but basically you get the idea, which is that we are set up in a way to potentially continue to break down if we're considering this wedge formation, it basically broke down, right? And so huge risk to the downside. But was this just a maneuver to fill the CME gap? If we filled that CME gap, maybe the market is looking for an excuse to get back into this wedge or break above it, in which case that's why I told you guys the number that I'm looking for is 20,000, perhaps 20,500 just to be secure. And if we get 20,500, then in my mind we could just be breaking out of this wedge, and then we have that bullish possibility, and all of this was just shenanigans to fill in that CME gap down here, right? I'm taking you through the scenarios in a quite detailed way, just so that you can understand that this isn't necessarily done yet, okay? This isn't the last word. We perfectly filled a CME gap. That can allow us to continue to go back up, right? And just kind of reset the baseline and get back into this area if we can hold it. But you can see the numbers that we're working with. We have to hold above 20,000 and preferably above 20,500. Then we can talk about, potentially exploring the middle or the top of this range in terms of a long position, right? Until then, you should just look at this as a wedge that's breaking down, or potentially just a channel, right? Just a channel, which itself being at the top of the channel there is more likely to come down and test the bottom of that channel, right? So let's see, that would put Bitcoin around 18,000 if it did come back down into this area. And if we go over to the 24-hour exchanges, you can see that area that we kind of bounced off of was 17,000, 600-ish, right? And so if we did just break down on CME to 18,000, then technically, we would still have kind of a higher low, even if we did break down to 18,000, and we could still potentially check out the mid-range or the top of our range for a potential trade on the 24-hour exchanges. But these are the things that you have to think about, just so that you can see all of the scenarios in your mind. Potentially a breakdown to 16,000, potentially a breakdown to 18,000. Potentially, we could just pop up to 20,000, perhaps secure 20,500 pretty bullishly. Or, basically, we could just have some type of, sudden surprise, just like we had these type of whale games. Who knows? Maybe they just suddenly shoot us up to heaven or drop us down to hell. Liquidity is quite low these days, and so I just don't put that past the market. Guys, gonna stop there. Basically, it's a holiday today. You don't need to be trading. Just be aware of the setup. And of course, stay safe and happy trading.